All right, welcome to the Trading Academy Day 9. Now, originally this was going to be another video, but since I uploaded the homework video on Sunday, I encouraged you guys to ask questions. And one of the questions in there that I noticed that other people were talking about was somebody asked basically, can you help us identify like the swing points? Because I had briefly mentioned it in the intro to liquidity video. So we're going to go and mention types of liquidity, right? I'm going to call this video liquidity part 2, and I'll show you guys like the swing lows, the swing highs, the 3 candle formation that forms a swing low, swing highs. So thank you to whoever asked that question. I forgot your username. I'm so sorry. I apologize, but we'll just go over the different types of liquidity and then the swing points, right? So that leads me into, the first point, right? The types of liquidities. Like I said in the intro to liquidity and the draw on liquidity video, you want to look for these liquidity points, which are mostly all the time, are going to be at swing lows and then swing highs, right? Now, the swing lows and swing highs are formed from a 3 candle formation. Okay, for example, right here, right? We have 3 candles. I illustrated something kind of basic right here, but this is the same idea. So 3 candles, right? You're gonna have 3 candles at every single swing point, whether it be a high or low, right? You got 1, 2, 3. Now the lowest low between these 3 candles, that is going to be your swing low. Okay, so this is going to be your swing low. All right. So this swing low, the way you could tell it's a swing low, because again, 3 candle formation, right? 1, 2, 3, lowest point in these 3 candles, and then price starts moving up. So this is your swing low. You can consider this your swing low. Okay. Same thing for the top, right? Swing high. Why? 1, 2, 3, right? We have 3 candles right here, right? We got 1, 2, 3. Oh my goodness. Excuse me for my horrible trading view handwriting, but you have 3 candles. 1, 2, 3. Highest point of the 3 candles right here before price starts moving lower, right? That is your swing high, right? And then you notice price comes down here. It sweeps this low right here, right? Then creates a new swing low, right? Off 1, 2, 3 candles. Lowest point right here. So this is your new swing low, right? And now this comes up again, 3 candle formation, swing high. And guess what? Now we have equal highs, right? So these are your different types of liquidity. This is where liquidity is going to be resting. And you can also consider this a short-term swing high, because again, what is this? 1, 2, 3. This is the highest point of these 3 candles. So this is what we call internal liquidity or short-term high, right? This is a short-term swing high because you have your other 2 points of swings, right? You have your swing low, swing high, and then this swing high forms in between these 2 swings, right? In between this swing low and swing high. This swing high right here forms in between these 2. So this is an internal swing high, right? Because this is the external range, right? So we're getting a little bit advanced because I'm talking about internal and external liquidity, but it's very simple to understand. Just know that there's 2 swing points, right? Swing low, 3 candle formation, 3 candle formation, swing high. We make another swing right here, right? 3 candles, boom, short-term swing high, internal liquidity, internal swing high, whatever you want to call it. And then we have another 3 candle formation right here, lowest point, new swing low after sweeping this liquidity right here. Are you guys starting to understand, right? Now, we come up. These are different types of liquidity right here, right? So we have right here, I tried to draw equal highs. Let me go ahead and move this so it doesn't look like it swept it. So right here, we have pretty much equal highs, okay? You'll see this a lot in the charts when you guys are studying the charts. You'll see something like this. Sometimes you'll even see something like this, right? Where it's like price looked like it wanted to reach up there. And this is where the support and resistance traders are going to be like, oh, this is support and resistance. This is resistance. Let's place our stops up here above this swing high. Wrong. We attack that ideology, okay? We want price to go up and sweep these highs, right? This is where our take profit's going to be. This is where our entries are going to be. More in the advanced section, right? We want to buy at the bottom and sell at the top, okay? And there's ways that you can time that, right? No, but that's more in the intermediate to advanced section, which we'll get to here in a couple weeks. But right now we're just going over the basic stuff, okay? So 3 candle formation, swing high or swing low, swing high, right? Short-term swing high, swing low because it sweeps this. So this is a new low, right? Price starts moving away. We create equal highs. So this is where liquidity is going to be resting, right? Reason being is because we make equal highs. So these are where stops are resting right here, right? And if I just go ahead and illustrate another thing right here, forgive me for my horrible illustration. Most of the time, you will see price come up and sweep those relative equal highs, and you can even flip it to the downside, right? I just inverted the chart here, but it's the same situation for lows, right? If we have equal lows, price will usually go and seek those stops, right? Most of the time, like 95% of the time, market will always retrace. We can go lower and then, take out other liquidity that's way to the left, or we can go higher and eventually go higher to take out these relative equal highs or equal highs, right? Because again, stops are going to be resting at these points right here. Okay. Forgive me for all this crazy, ugly drawings, but yeah, liquidity is going to be resting above equal highs, above swing highs, right? These are swing highs, they're just equal swing highs, and price will draw up to that and sweep it. Okay. So what I want to emphasize here is just making sure that you guys are getting on the charts and recognizing these liquidity points. I also had another question in the homework video. Somebody said, how do we know which liquidity to target, right? Are we looking for last week's low? Are we looking for a weekly low? Are we looking for a daily low? Are we looking for an hour low? Okay, so most of the time, right? I'm going to show you guys here something. Most of the time, you'll have a daily candle, right? Pretend this is the daily candle, okay? You'll have a daily candle. Boom. I might even make a liquidity part 3 because this is very in-depth stuff or very basic stuff, but it's you could split them into parts because we need to learn about external liquidity, which I briefly mentioned here, and then internal liquidity. But we'll get into that a little bit later. Anyways, you'll have a daily candle. Okay. Most of the time on these bigger time frames, like the daily, the weekly, you'll have like the daily and weekly candle, right? You want to target either the previous day low, that's where a lot of liquidity will be resting. And most of the time on the daily chart, these won't even look like swing lows, right? You'll have a bunch of days grouped up and these won't look like swing lows. But if you zoom in to the lower time frame, say this is a 1 hour chart, right? This is the daily candle and you start zooming in, this is the 1 hour chart, right? And then at the swing low of the daily candle, right, you have what? You have equal lows, right? So these two would be two swing lows, right? So if you start zooming into the daily candle, you'll start to see, okay, I see my daily candle, right? This is price action. We've already swept these highs. So the next target must be these equal lows, right? Which is what? The previous daily low. Okay. So when you start zooming in to the daily candles, you'll start to see, okay, these are swing points on the 1 hour. I hope I'm making sense here. But this is pretty much like time is fractal, right? Or time frames are fractal. So it's the same on every single time frame. But if you're looking like at the let me get this trend line. If you're looking at the higher time frames like the weekly, the daily, all you got to do is zoom in and you'll see these swing points, right? I know on the daily chart, you might not see these swing points right away. Like if you're intraday day trading, meaning that you're trading every single day, you're looking for liquidity points. The previous day high and previous day low, or previous weekly high, previous weekly low, are very good targets every single day, every single week. They usually get swept. And most of the time when you start zooming in, you'll see that, there is a swing low like on the 1 hour, the 15-minute, etc. Okay. So hopefully I answered that question there. But yeah, this is pretty much, liquidity part 2, the 3 candle formation for swing highs and swing lows. We went over external and internal liquidity pretty briefly, but I hope this video made a lot more sense in terms of the liquidity concept. But yeah, I might make a third one just to go over like external and internal liquidity, so that way you guys understand that a little more, and we'll actually go into the charts and I'll show you guys that. So I might make a liquidity part 3 this week. No promises. It might be next week because I do want to get into some other stuff. However, you guys might need to know that. So I might just make a liquidity part 3 tomorrow. So yeah, hope I answered a lot of you guys' questions, and yeah, catch you guys in the next one. Peace out.